Hey everyone, and welcome to the PivotBoss Closing Report for April 5th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis after the recent session here. Obviously, the ES here in the daily time frame, we've continued to trend quietly higher here and starting to reach the overextended portion of this move. So this is basically the end of the game on the upside. We may see some gyrations back and forth again. I've talked about this over and over. There's no real trade opportunity here other than attempting to defend one of these lower key levels here for a shot at squeezing higher into 2100. So that's the idea right now. If bulls can defend 2030 or perhaps the 2009 levels, those are two key levels there where if you defend that zone, you could see a quick slingshot move in the opposite direction into the primary and secondary upside targets, culminating with a move into 2100. Failure to hold above 09s here puts a lot of pressure to the downside, at which point you could see prices trend much lower until it either finds a low or reaches previous values. So right now, the current uptrending price structure remains intact. Buying the dips is still advised until proven otherwise, but we're starting to get to that extended portion of this move, and trading ranges could be seen after that recent move here. So now if we take a look at the intraday time frame, here's a look at the daily time frame. Basically, the early idea this morning was to fade the early sell-off and attempt to see it perhaps it move back towards 2055s. However, it became apparent once we were in the trading room that this market was basically whipsawing back and forth and just taking out the previous highs and lows. And once the market gets into that type of territory, there's not much you can do with it, especially as price trades around value. There's just not much you can do other than patiently wait for new highs or new lows to develop and then look to fade it back to value. That's about all that was today for the most part. But I would say that this pullback, and even if we drop out of here a little bit more, let's say a 10,000 volume bar chart here, this pullback could be seen as the bottom end of a channel here, and then all of these late participants to the move could see their stops run back up. So again, we're looking for an eventual squeeze back up, and at some point we're looking for bulls to defend and return this back to value and perhaps to new highs. Failure to hold 2030 would be significant, and on a swing basis could open up a return back toward 2000. Okay, let's take a look at crude oil. Here's crude oil. We talked about this the day before. Basically, this major level at 37.50, that was a previous low. Price when offered through it. So Friday during our hangout, we talked about defending a pullback into 37.50 to 37.65. Price didn't quite get to that area before it sold off and has come nearly into 35.17. So that was what we were talking about last Friday. It was basically bulls want to defend this edge. But given the recent rejection here, we could see a push back into previous value at 35.17, which is basically where price traded in this previous period of time. Now, the fact that the previous week's low went rejected here, 36.63, makes it a very important key level to watch. Bears are currently defending that area for a continuation lower, perhaps as low as 34.06, which is the primary downside target. If bulls are able to defend the previous month's low price here, 34.91, that could be an area to return it back toward 37.50 for a big retest. Okay, let's take a look now at the intraday time frame. On an intraday basis, you can see the previous low right here. That's the previous week's low. Price sold off, and then price basically formed a range below, generally below the 25% weekly expansion target. Higher lows here, a little bit higher highs, and eventually we saw a squeeze to new highs in the 36.15. 36 is very important here. Above this level opens up a move back to 36.98. Failure to hold above it could put pressure to the downside here, and we know more downside could be seen into that primary bear target again, 34.06. So right here, a lot of trading range action. We have crude oil inventories in the upcoming section, so that could offer a very nice catalyst for the upcoming day. Again, the pivot right here is going to be 36 evens. All right, taking a look at the gold futures contract. This one we talked about the potential for seeing downside expansion finally. So we've been on top of this one where it's defined a distribution range on highs. We talked about how Composite value has now creeped lower into 1202 half, and basically, we've been pushing right into that zone on the downtrending channel here, just rejected off the previous month's close price. That could send prices right through the previous month's low and into the next HV and below at 1095. So right now, this is the earliest indication here. Again, obviously we had prices rejecting here, but this is the first time we're seeing a point where we could see actual expansion to the downside from this range, because these areas right here weren't really tests that we were looking for rejection. We were looking for rejection rather back up, but this is a point now where we could finally see expansion through that level and into the next HV and below. So it's going to be important to watch 1202 half very, very closely. Looking at the NQ, continued uptrending market, not really much to say here other than prices above the previous week's high when offered. So we saw a push back into the previous midpoint of the last week. Again, this 44.40 is very important short term. Bulls want to keep that area bid for another attempt at squeezing higher. Failure to hold 44.40 opens up a big time test at 43.55, another level that bulls want to keep bid. Failure to hold that level, auctions lower. So there's still, you can see there's bulls are still in control of all these key pivots as the price continues trending higher, but at some point here we're going to start to see these things top out a little bit and then perhaps form a distribution range on highs. All right, taking a look at the intraday time frame real briefly here, a very clear trading range is developed, 44.55 up to 44.85, very solid here, 30 handle range. Again, this is going to be a range to watch for expansion, because when you trade in a nicely coiled range like that, especially after an extended move down, all of these participants that were late to the party could see their stops run, and that could fuel another move to new highs. Conversely, if prices are able to hold below this LVN here on the profile, that would tell you that bears are still defending, and then now downside stops could be seen below those 44.55s. So watch this range really closely as we head into Wednesday's trading. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.